The Taxpert Trading Loss Analyser 2022 performs in a matter of seconds or even milliseconds calculations that would take you literally hours to complete manually. And it builds in all the different ways in which trading losses of a sole trader or partner can be relieved, given the government's introduction of the temporary extended carryback of trading losses in 2021 and 21-22. Now, as with our other calculators, the yellow fields are the inputs, and I've already put in on the screen for the 5 years that can be affected by this, trading profits in each of the first 3 years, and then a trading loss of 20,000 in 2021 and 80,000 in 21-22. And then I put employment income in for each year. Forget about the tax and class 4 liabilities. We'll look at those in a moment. But over on the right, we can also, as with our other calculators, select whether the taxpayer is of state pension age or not, yes or no, because that will affect their national insurance liabilities, and also whether it's a Scottish taxpayer, aye or no, because that will affect their income tax liabilities. Let's go back to no. The recalculate button, hugely important. Because of the complexity of all of this, the tax and class 4 liabilities for the different ways in which losses can be relieved have to be recalculated in the background every time we change a figure. Before looking at that, though, notice also 2 more yellow fields. We can input the prospective tax value of losses carried forward. So I've input 25%, you could have 45% if you wanted, or you could have 5% if you wanted, not 545. But it just depends what you feel the taxpayer is likely to generate, and ditto with class 4. I've put in 11%, which is, of course, the current rate for class 4 in excess of the lower profits limit and up to the upper profits limit. But you can change those figures and that will affect the output. Now, let's have a look at what happens when we press recalculate. We'll just see that first. It works round and round, does all of the background calculations, comes back to where we started. And you can see then under the tax and class 4 liabilities section, I've got 14, yes, 14 different ways of calculating it. Many of them come up with the same answer. Now, again, we've got the same 5 columns for the tax years. So in each case, 17,835 is the tax and NI for the first of the 5 years, which is 1718. And then the 1819 figures vary from 3230 up to 6822. The 1920 figures vary, the 2021 and 21-22 figures vary, and the way in which they vary varies. It all depends on what combination of claims we make. And then we've got the totals of the tax and class 4 with a minimum figure so that we can identify which year. It looks like that option is a minimum one, and so is that one. But then when you factor in the value of the carry forward, which of course is dependent on the rates you put in, we can take an actual value of the cost of tax and class 4 less the value of the carry forward, and again the minimum of that, 5457. I think in this example it's the same 2 options, so actually it's not, no, because of the 25% carry forward and the 11%, actually doing nothing, no current claims, no extended claims, all losses carried forward, gives me the optimum result, which is quite interesting. We'll have a look at option 14 in a moment, because that one's a bit special. But beneath that, in terms of checking the analysis for each of the options, we've then got the way in which the losses are set against income. So I can see that the 18,000 from 2021, I'm using 13,000 down here against its own employment income and carrying back 5,000 to 1920. And then, and also I've got 2,000 going back against the total income. So that's 5 and 2 and 13. That's the 20,000 of loss that we had. You can see it's 20,000 loss, that's that. And then the 24 the loss in the second loss year was 80,000, and under this analysis I'm using 24 against its own year, and then carrying all the way back under the extended relief to 1819, but I can only use 15 there because that's against trade profits only. And what I've then got is over here a schedule showing how the losses are used, which is another way of setting out that information and the tax and NI values. But that was option one, which wasn't one of the optimal ones. I can either input a number, so if I input 7, then you can see it changes. That was the one where we carry forward everything. If I input, say, option 5, that's different again, and you just play with it like that. Now, what I've done is select the options that are most obvious, but if you think of another one, you can go to this window, which is the DIY window, and you can see there I've got the 2 losses of 20 and 80, and you can then decide what you want to do, but do be careful and make sure that you do it in accordance with the legislation. And in this presentation, I'm not going to go through the legislation, but it's all a question of what are the different rules for the current year losses, previous year, and then the 2 years before that. And of course, the programme has built in the various restrictions on sideways relief, maximum of the greater of 50,000 or a quarter of your adjusted income, and also the restriction, not that for many of you it'll be relevant, to £2 million for the extended carry back of the loss under Finance Act 20. So there it is. Wonderfully complicated, but full breakdown, as you can see, and we'll show exactly what the options are and help you advise clients on how best to make claims. One point I would make, by the way, is that for 2021, although that year ended over a year ago and the filing deadline was 31st of Jan 22, it is possible to amend a 2021 tax return at any time up until 31st of Jan 23, and that could be relevant if we're looking, for example, at option 3, because option 3 at the top of the screen now is where we use section 64, the traditional sideways relief in the current year than the previous year, but then we use the extended carryback for 21-2 before we use it for 2021. Now, you might already have claimed for 2021. Well, you can unclaim by filing an amended return by 31st of Jan, and the revenue have confirmed this to me, by 31st of Jan 23, so that you claim the 21-2 loss before the 2021 loss, and that result in this particular example doesn't seem to make much difference, but in other examples it could. So that's quite an important part of the breakdown of the different options. But there it is. The analysis of losses is a nightmare now. As I said at the beginning of this video, this does in a matter of seconds what could take you hours to do, and in fact you probably wouldn't do it. So have a look at our trading loss analyzer. I'm sure you'll find it very useful.